What is gearing? Gearing, it shows the relationship between borrowed capital and the own capital. Borrowed capital, it means it's money that we borrowed from the banks. Those are loans, usually long-term loans. While when we look at our own capital, you know what makes the owner's equity of the company. It's retained income together with shareholders' equity. That is our capital, right? So gearing is the degree to which the business is creditworthy. So it's very vital for you to know the formula for gearing. The formula being non-current liabilities, which is long-term loans, is to shareholders' equity. So if you know your non-current liabilities, which is your long-term loan, it's easy to locate in your question paper, and then you should also know what makes up your shareholders' equity. So for the extent of this calculation, you will need to know when you calculate your shareholders' equity, you need to add your ordinary share capital together with your retained income. And then now you can get out your ratio. Your ratio will show if this business is high risk or low risk. Being high risk, it means that will be high gear. If we have a gearing ratio of 0.8 is to 1 or 0.9 is to 1, that is high risk. But 0.1 is to 1 or 0.2 is to 1 is definitely low risk. So as we said, this is the relationship between own capital and a borrowed capital. So now I want to show you in your exam, okay, come closer this side. So in your exam, you will need to make this calculation. So we say loans, obviously long-term loans is to what? Is to equity, is to equity. So equity, shareholders' equity. I did say shareholders' equity plus ordinary share capital and retained income. So now, when we calculate this ratio, I did say we said it's the degree to which the business is low or high risk, right? And 0.1 is to 1. That is low, obviously. 0.9 is to 1. That is high, as you can see. So how can you interpret this ratio if you look at this? So we said these are loans. This is equity. So for every R1 that we have invested as the shareholders, we owe in loans 1 cent. Low risk, you don't have a problem. If you went on a R1 and then you only owe one person 1 cent, that is not a risk for you. It's not a problem. But now, if we look at this one, this example, for every R1 that we have invested here, we owe 90 cents. That is high risk. You have a problem. The moment now you have to pay this person, you will be left with only 10 cents. So I do believe people will understand the relationship between gearing. What is gearing? You need to understand what is gearing, and you need to be able to comment on gearing. So people, your question, they will say, should they get more loans? Obviously, you should calculate their gearing and look, oh, this business is still creditworthy, or no, this business is no longer creditworthy. They can't get more loans. And then if the business has to raise funds, they can issue shares or they can check in other options that they may have. All right, sure.